Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, July 25th. U.S. stocks are broadly lower in early trading after Congress and President Obama failed to break their stalemate over the debt ceiling. Treasury Secretary Timothy Geithner has said that if a deal isn't reached by next Tuesday, the U.S. may be unable to meet its debt obligations. Despite the looming deadline, the two sides are still far apart. Senate Majority Leader Harry Reid is working on a plan that would raise the government's borrowing limit by $2.4 trillion through the 2012 elections. That would be paired with $2.7 trillion in spending cuts and would not touch Social Security, Medicare or Medicaid, or raise taxes. Republicans, led by House Speaker John Boehner, are pushing for a smaller, shorter-term increase on the debt ceiling. President Obama has said he would veto such a bill.
Most analysts and investors remain confident that the United States will not default on its debt obligations. But following the collapse of the negotiations over the weekend, we are seeing a move away from U.S. government debt. The yield on the 10-year Treasury bill is back above 3%, and the 2-year note is now yielding more than 0.4%. The dollar is also losing ground against most major currencies, except one. The euro is tumbling after Moody's Investor Service cut Greece's credit rating by another 3 notches, putting it just one level above default. The agency said that the rescue plan approved by European leaders last week sets a negative precedent for creditors of other struggling Eurozone nations. The bailout combines nearly 110 billion euros in fresh financing with 37 billion in relief from the private sector through a debt swap.
All this uncertainty about debt and the economy on both sides of the Atlantic is prompting a flight to safety among investors. They're flooding into precious metals, sending gold to another all-time high near $1,620 an ounce. Silver is also rallying, moving further above the $40 mark. But oil prices are taking a hit amid concerns about a slowdown in energy demand. After closing near $100 a barrel on Friday, light sweet crude is dropping more than $1 today. Overall, energy stocks are broadly lower, including oil field services firm Baker Hughes. It's down more than 1%, despite topping Wall Street estimates with its second quarter profit. Anadarko Petroleum will kick off a big week of energy sector earnings when it releases its results today. ExxonMobil, Chevron, ConocoPhillips, and many others are all due to report this week.
After today's closing bell, we'll get quarterly numbers from chip makers Texas Instruments and Broadcom, along with Netflix. Another technology stock getting some attention today is Research in Motion. The maker of the BlackBerry said it will cut 2,000 jobs from its global workforce, leaving it with about 17,000 employees. RIM warned about the layoffs in June when it slashed its earnings outlook. BlackBerry sales have been slumping recently as Research in Motion continues to lose ground in the smartphone market. And finally, pay attention to online brokerage stocks today. According to the Wall Street Journal, TD Ameritrade's board will discuss making an offer for rival E-Trade Financial. On Friday, E-Trade rejected a call from its biggest shareholder, hedge fund manager Citadel, for a special meeting. Citadel wants to address several proposals, including a possible sale of the company. E-Trade is jumping nearly 3% on the news, and TD Ameritrade is also moving higher. That's the latest from Weiss Research. Have a great trading day.